Good evening, everybody. Say, running late here. I've got, as usual, trying to do the last few minutes of. All right, tonight we're going to kind of. I get a lot of questions about the T-line training, so I'll kind of try to build that into this session. So here's the things that we can kind of evaluate using the T-line. One, notice we're starting to see some potential sell signals here in the Dow. Got a hanging man, shooting star, stochastics in the overbought area. What would be the likely low volume? How about that? Is that any better? What would be the likely analysis of this? If it opens lower after these sell signals in the overbought area, at least we can kind of speculate that our first target is coming back to test the T-line, which means there's probably going to be a day or two of consolidation. Whoops. And that's right. And what's our evaluation of the NASDAQ? Started off with a good kicker signal. It's kind of right here at this resistance area level, and it did a bearish Harami doji. So we can make our assessment based upon what we know is the signal or the potential signal. Where are we in the stochastics? Where are we to the T-line and the other aspects of human nature that we know? One, we know if they break through a resistance level, they'll likely come back and test it. Two, a bearish doji Harami, which puts us in a good position to evaluate what's going to happen tomorrow based upon how they open tomorrow. So if they open lower, then the analysis is pretty strong. They're going to come back and test the resistance level to see if it's going to act as support. And three, more than likely, tomorrow the T-line will be right here at the 50, so we can see what's happening from that point. All right, so I'm going to take a quick run here and see what crude oil is doing. Crude oil is just kind of basically moving sideways. Gold kind of starting to slow down a little bit. Darn, how come I ran out of ideas already? The soybeans just kind of sideways. I guess I ran out of ideas there. So what we want to look at is, we always get the question of, if you go through and you see a day where you have lots of good buy signals or lots of good sell signals, well, let's say it's all good buy signals. You get 60 good buy signals. How do you sort things out to know which ones would be the best ones? Well, you can start sorting them out based upon which signal is the strongest signal. Obviously, we've got what we call the top ranked signals and patterns. The best friend, the kicker signal, the left-right combo, a bunch of them. So this is where we can start putting what we call 2 plus 2. On our decision to go long on AMAT was based on what happens when they come up through a resistance level. They come back and test it. How do we know whether that test is good or not? Because we can see what type of signal occurs at that level. In this case, what do we have? A best friend gap up. Off the T-line, off the 50, J-hook pattern, what would be the next likely target? up here to the 200-day moving average. How long do we stay in it? As long as it stays above the T-line, with the caveat that the further away you move from the T-line, the higher the probability is going to come back and test it. So not only does the combination of the signals, the pattern, the confirming indicators, first for confirming indicators, the T-line, the next are the major moving averages. What's this kind of tell us up here? We've got a bearish Harami doji. Stochastic's good distance away. We're doing it right at the 200. That would tell us if we were long, what was the evidence that it's time to take profits if it opens lower? One, look where they were gapping it up in the overbought condition. Fits in with the philosophy of the Japanese rice traders that say, where do most people buy? They buy exuberantly at the top. How do we see exuberance? Because they gap up, big candles, and then there's a potential sell signal. This all adds up to, this is a good time to be looking for a sell signal. And what's another confirming indicator? Look how far away you are from the T-line right now. So just gives you a little bit more impetus, I guess is the right word. That's not the one I was looking for. I can't remember what I was looking for. So anyways, when you add everything up, you know when to get in, you know when to get out. This gives you a lot better feel for what a price movement is doing based upon the signals, the patterns, and the confirming indicators. So let's go through what the rationale is for some of the decisions. Type. For example, we can pretty much see what's happening on this chart. There's your fry pan bottom. There's kind of your breakout. There was your support again at the 50. And there's your buying, all kind of confirming this pattern was setting up for a fry pan bottom breakout. So once we can identify patterns that are telling us there's a lot of strength coming into a price move, knowing the patterns that are illustrating that, just gives us that much better prospects of when to be in a trade and when to get out of a trade. So you can see right here, when it broke out through this level, kind of giving us a, this a little bit smaller, giving us our J-hook pattern. So here's the optimal time to be buying. How long do you stay long? Until you see a sell signal and a close back below the T-line. So there's always the question of, well, should we get back in this one now that it's come back up on kind of a Morningstar signal? And the answer to that is, if you've closed out this position, this becomes a brand new decision-making process. Not because you were already in it and you had a good profit and now you think there's more. The decision right here is this the best place to be buying, or is there another pattern out there that looks like this that gives us much greater opportunity? So that's part of, and the reason I point this out is because I always did this myself, that boy, this could be going up more. I sold it out. I should get back in. But then I realized I've just done my scans, and I've got 14 other positions that look great. Why jump back into something where the probabilities are now starting to go against you, even though it might be going up further? You saw some strong selling in here. This is what keeps your emotions out of your trading. Or I should say it this way. This is what keeps my emotions out of my trading. Once I see that buy signal, and this was a little bit testy. But notice the result of this trend. They could never close this back below the T-line. So now where are we sitting? We're in the overbought area. We've got wave 1, wave 2, wave 3, getting to be the same magnitude as wave 1. We're starting to move a little bit away from the T-line. What are we more alert about up here? We should be thinking, all right, wave 3 might be getting near the end. They're starting to exuberantly buy up here. Let's get ready to start taking profits on the first signs of a sell signal. So the first criteria is, what is the signal? Kicker signal. What's the other visual aspects that we can put into this? Why isn't the previous chart a J-hook? You can call it a J-hook. Right there? Yeah, you can call that a J-hook. So that's why I would say wave 1 and wave 3 are about the same. Is that what you were looking at, Magic? Yeah, consider it a J-hook. And where did this J-hook all occur? Right here at what would be considered a level everybody's watching. Oh. What was it? Well, for crying out loud, what was it? Oh, is it a INSW? It could be. But then it becomes a question of, do I want to get back into this one? Or are there better ones out there? So yeah, you could consider that setting up for a J-hook pattern. Just trying to see if there's a better way to illustrate that. So once I close out a position, what am I doing with that money? I'm probably going looking to find the best trade I can use for that money. Is this the best place? Maybe just to pacify my ego, I don't come back in with a full position. Maybe I come in with a half a position and say, well, there might be more upside, but I'm in a higher risk area. If it's put on a half a position and it goes up, I can still rationalize that I've stayed in this uptrend, but I'm going to go find something that has much better probabilities. Are you looking at the daily? What time frame are you using? Cynthia, yes, these are all daily. Now, if I'm going to go to a was it EEIX? I'm going to go to something like this. What? And I think there's a breakout in progress. Now I can flip to a intraday chart, see if I can find it. There it is. So let's say I'm buying right here. How far up will it go? I have no idea. But I know I can stay long, stay long, stay long. But now look what's happening on my 10-minute chart. What's our simple criteria about using the T-line? You can stay long until you see a sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability is going to come back and test it. So if I'm up here and I'm that far away from the 10-minute T-line, and I'm starting to see sell signals, where do I want to take profits? I want to take profits now that I can see that it's pulling back, probably at least back to the 10-minute T-line. What's the worst case scenario? I close it out, and then it curls back up, does a J-hook, I can always get back in. So that was a long answer to say, Yes, everything we're looking at, my first criteria, everybody's first criteria should be what is the signal or the pattern setting up to give us the probabilities that it's the daily chart is telling us we're moving in the right direction. Even if I'm a day trader, I want to know which way that entity is trading so that I know I'm probably going to be trading mostly in that direction that day. So the more things that we can add into our analysis, like a scoop pattern. So if I'm looking at this right here, here's your best friend. Now what's the, again, this is what we're going to be concentrating on Saturday. What is your best confirmation, or not best confirmation? What's your additional confirmation of your best friend signal? You're in the oversold area, doji gap up, and it closed above the T-line. That right there tells us we should be heading higher. Now, if we're heading higher, what do we see as a potential pattern? There's our scoop pattern. And what do we expect a scoop pattern to do? We expect a scoop pattern to have a slingshot effect to the upside. So if you're sitting in this, this is another factor that we're going to be going over. But if I've got 10 positions on, and I've got this one on coming out of a pattern, and I don't have to worry about it at all because it's not closing below the T-line, out of those 10 positions you have each day, how much time do you have to spend on analyzing what this one's doing? Approximately 3 seconds. Say, well, it's still above the T-line, still above the T-line, still above the T-line. Now, we got a little bit of different analysis. We're way up here in the overbought area, a good distance away from the T-line. Want to be a little bit more, active as far as setting a stop where it shouldn't trade that far away from the T-line. So when prices extended away from the T-line, can you use the 3T? Yes. So you can see how the 3T line now becomes more effective, but you're still using the signal, the distance from the T-line, and then just as a kind of a little fluff, use the 3T line. So if I was long this, I'd probably have a safety stop down here tomorrow. But if it came in this direction, that's where they're starting to take profits. That's what improves your ability to see when the probabilities are going against you, knowing what the Japanese rice traders have professed for years. Where do most people buy? They buy exuberantly at the top. We've got the capability of seeing when that exuberance is stepping in because of those factors, the distance from the T-line and the magnitude of the signals. So these are the type of trade setups you want to identify. Kind of a fry pan bottom, kicker signal breakout, and I was illustrating this on the YouTube today, but notice that the market was selling off today, but the kicker signal, the strength of a kicker signal is usually going to keep you moving in the right direction. So there's our little kicker signal. This is not a good illustration. I think I'm going to do this real quick. That's what I thought. That's, can you see this? I think it's still on the screen. Star actually came down, tested the T-line. That's also a very relevant factor, but after hours it closed up here. So what type of setup do you have? Got a double doji setup. Is it a J-hook 2? On this one, Cynthia, you could fit this into the category of a J-hook if you're looking at this. Again, we call this the classic pattern. There's your fry pan bottom. What do we expect coming out of a fry pan bottom? A good strong price move. And you have a consolidation and then a J-hook pattern. So it's a combination that you have to assume, not have to assume, you should assume these patterns. The reason we recognize these patterns is because they occur often enough and the results are predictable with a high degree of predictability. Predictability, that's the right word, that we should have expectations of what these pattern setups are telling us. Let's see, we did amen. Let me go real quick to the biggies. You can see what's happening on NVIDIA. Yeah, I was tongue-tied there. You can see once this came out, kind of came up through the resistance level, showed support. Where do you think the next likely target could be? Up here, you've got an uptrend, got a kicker signal off the T-line. Got to assume you're in an uptrend as long as you're staying above the T-line. Let's see, Netflix. There's your J-hook pattern, starting with your kicker signal at the 200 and closing up above the T-line. And the reason I keep mentioning this is anytime I see something after a signal closing above the T-line, I know my probabilities have just improved dramatically that the bulls have taken control. Now, there's ways to get confirmation. For example, right here, when we recommended ZLab, look at the kicker signal and look where it closed. Right there at the T-line. Now, that's probably a good probability that the kicker signal is going to take things higher. But it becomes a better probability if it closed above the T-line, because look what our T-line is telling us all the way down. We're still in a resistance area. What did this open tell us? One, it was confirming the kicker signal. And two, it was telling us the T-line was not going to act as resistance. And three, was telling us this downtrend had been broken. So this is where you get kind of a double confirmation based upon things closing right at the T-line and then opening positive after that, provided it is a signal. Let's see. Same scenario here on Apple. When they do a kicker signal back up above the T-line, that now makes you assume there's an uptrend in progress. Whoops. Now, also, just because we've got a strong signal doesn't necessarily mean everything is going to go in the direction that we want. Probabilities are that they will, but we also have other little indicators that tell us what the strength of a move is or whether that move is still in progress. Notice what happened today on Amazon. It gapped down toward the lower end of the trading range. Finally ended up as a doji type day. That makes this very simple. If it opens lower tomorrow, what's it telling us? They're probably pulling back to test the T-line. What's that telling us about the strength of this uptrend? Not as strong. On the other hand, if this opens positive and trades positive, that tells us the strength of our kicker signal is still there. And then what can we calculate? Well, there's probably our first target, like equating to the 34. There's our second target, fill in the gap. And there's our third target. So because we know the doji rule, we can now be much more accurate in our assessment of the strength of a trend based upon what happens after that doji. If they open it lower, it's not going to be as strong as we thought. If it opens positive, telling us the strength of this trend is still working. Tesla just can't get out of its own way just yet. So right now, I wouldn't be short, I wouldn't be long on Tesla. Now, where would I short it? Notice what happened. Kind of hit the T-line area. If this opened lower and started trading lower, it gives us the next pattern setup, a bearish J-hook. All right, so today I think it was today, maybe it was yesterday, Marshall pointed out this one. And this is a great illustration chart. Look at all the elements that we can identify that this is a good, strong chart based upon the signals and patterns that we know of. You can see the fry pan bottom setting up. You can see the breakout. There's your best friend, gap up through the 50, continuing the fry pan bottom. And when they broke through with this day right here, your best friend signal, telling you they weren't resisting at the 50 anymore, where do you think your next target was? Up here at the 200. When it got up here, what do you have? You had a indecision, a shooting star. It was time to take profits. But notice what really solidifies the analysis of what's happening here. Here's our next, this is almost kind of a little bobble breakout. Hold right back, smack dab to the T-line. And when I use that technical term, smack dab, that means it's hit right at a level that the T-line is indicating is a natural support and resistance level of human nature, which is significant because nobody else has the T-line on their charts. So it came right back to a level that nobody had as an indicator on their charts. We could see what was setting up. There was our bobble breakout, which told us we could be buying here. And so back to that rhetorical question, do we always get big moves like this on a pattern? Definitely not. But we put ourselves in positions where the probabilities are going to be heading in that direction. Yeah, I wouldn't really call that an abandoned baby. Who knew? That's right. No, I wouldn't call that an abandoned baby. I would call this an abandoned baby. And why is that relevant? Because that reversal is very strong, very significant. So you could be a buyer of Very because of this right here. Okay. So I wanted to point out this one because there are charts that just have everything going for it where you can analyze what was going on. And did I miss one? Oh, maybe it was this. No, this is the, I can't remember which one it is. It was something that was doing kind of a fry pan bottom. I want to say the Three Valleys. I'll have to figure it out. OPNT. No. That's just a big gap up now. Was that a gap up or was that a reverse split? Almost doubled. No, that's just a, I don't know what that was. All right, so back to the question of how do you pick out the best ones if you've got 10, 20, 30 good charts? You're trying to find the ones that have the most relevant strong signals. Now look at your doji sandwich, not doji sandwich, your bullish flutter kicker signal. Oh, is it Sono? All right. Oh, it's a buyout? Okay. Look at your bullish flutter kicker signal. Now, these are very strong setups because look where the doji occurs. It already is gapped up toward the top end of the previous trading. Look where it kind of hovered right here at the T-line. So when you add 2 plus 2 together, meaning we use the doji rule, that if it opens positive, what's it telling us? It's going to trade positive because of the doji rule, number one. Number two, because we're sitting right here at the T-line, it's not affected by the T-line being a resistance anymore. And we've got a flutter kicker signal, which basically says if we took this little flutter out of here, this is a kicker signal. So this becomes a very good alert, whether you're getting ready to put in on a swing trade or even a day trade, that if you see them gapping up that doji toward the top end of the previous day's trading, we know we can be buying with great confidence on a positive open the next day. We don't have to wait around to see whether it's confirming. And again, that same rhetorical question, got a strong signal breaking out, are you always going to get a day like this? Definitely not. We'll be happy to see something like this over the next few weeks, but it still puts you in situations where the probabilities of being in a strong trade is dramatically in your favor. So anytime you can see a basing action, bullish signals, and a gap up above the T-line, it's telling you there's a dramatic change of investor sentiment. Now you have the opportunity to say, all right, if I'm buying this, what's my upside potential? Well, it could be back up here to the moving averages, which tells you, up that's a 25, 30% upside potential. That's exactly what I want to be getting into, is things that not only tell me I have a high probability of being correct in my trade, but have a good percentage return. Look at our slow curve, smack dab off the 50, and it did it with a little bullish flutter kicker signal and created this type of move. So look at your neon sign here. That was the buy signal because you're coming right off the 50 and the T-line, bullish flutter kicker signal. And then look what was happening up here. What was our neon sign up here? Look how far away you are from the T-line. So if it opens positive here, this is what we want to use this alert for. This chart you're going to see if you come on Saturday. Now you have the simple logic of where would you close out this position. Well, if it opened here and traded up, look how far away you are from the T-line. So what should we be looking for? Selling. Now, it may not occur on this day, but where would be a safe place to put your stop if it was trading up here? Back here where it opened, or halfway down this candle, or definitely back below this level. Why? Even though we haven't had a sell signal up here yet, we've got this alert of how far away you are from the T-line. Now look what it's telling us. Kind of doing a J-hook pattern coming right off the T-line. That T-line acts like an additional visual confirmation of where the natural support and resistance level is, and we can see that's kind of supporting the fact that we're heading for a for another J-hook pattern. Oh, the best friend signal up through the T-line. Anytime you see a signal, notice not only did they come up through the T-line, but they gapped above the T-line. They used the T-line as support and headed positive. that should tell you there's a dramatic change of investor sentiment. Best friend, 2 plus 2, a doji, right on a level everybody else is watching. Stochastics in the oversold area. A gap up through the T line. The reason I'm pointing this out is for years, not years, but quite a while, say, oh man, that's a good strong chart, but it doesn't look real good. Well, the more I saw these and then came back a couple of days later and said, oh heck, this one works. That's why this one is named your best friend, because it works. How far is considered too far away from the T line? Got to remember where you are in the trend. If they're just starting the trend, remember the T line is going to catch up. So remember, you're still trading the pattern. The T line is an indicator that tells you what's going on in investor sentiment as a support level. So if you think you're a little bit too far away from the T line, I guess at that point you'd be deciding whether to be buying. But if you were long, and you think you're a little bit too far away from the T line, just set a stop someplace where it shouldn't trade if it's still moving in the right direction. There's another one. I think that was kind of the same situation. RKT. Again, right off the T line gap up through the 50, through this level, and this is what gives you that much more evidence that there's a new investor sentiment, especially when they break out through a level that everybody else can see. Couple levels. One, this level right here, and two, the 50 that everybody's watching. And so this kind of dispels that fear of, boy, I don't want to be chasing after this because, oh, it's already up 14% today. The answer to that is, look at what the signal is telling you, not what the magnitude of the return or the move is, because that might be just the beginning of another 200% move. You want to be trading the information that's being given to you based upon the signal that's been created. Okay, we did Mana. So here's another piece of information. Indecision, 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 indecision. Whoop, now there's a new message here. They've gone through the natural support and resistance level. This becomes much more viable of being a cradle type pattern because of the fact that we just broke that percentage probability factor, the T line. Okay, fry pan bottoms. Sava, you can see there's been a change here. Again, this tells you there's a new dynamic coming off this indecisive slow curve type pattern. HRT is a cradle pattern. Again, what type of parameters do we put on this cradle pattern? Well, one, it's a cradle pattern. Two, it started off on this side with a best friend signal, doji gap up. Three, it closed above the T line. What's our first logical target? Right, coming up here to fill the gap and then possibly up to the 50. Now, if this was a 6% move, this might be closer to a 30% move. That makes it more worthwhile. Volume in HRT. I thought it was hefty. 1.1 million, 350,000, 380,000. So it's got, yeah, that's viable. PSX. What was the evidence that this next wave was about ready to start? They couldn't close this below the T-line. Anytime I see a Morningstar type signal at the T-line, that tells you they're not going down to the T-line. There's still more upside. We did vary. Once again, there's kind of your bullish flutter kicker signal. So anytime you see something gapping up above the previous day's open, that means there's been a very strong change of investor sentiment. If you're short, oh boy. I can't even remember what it was. Son of a gun. I was going to segue right into it. Yes, this was the one. Whoops. It's got the 3 valleys. Well, what's going on here? Crying out loud. Japanese rights traders call this kind of your 3 valleys. We look at it more from this end as your fry pan bottom J-hook pattern. Let's see, what was sector that seems to be working seems to be the steel sector. U.S. Steel went from breaking out through the 50 after your inverted hammer, best friend signal, closed above the T-line, opened above the 50, back and filled, but where was the next target? I hit it today, just hit the 200. So what do we got going on here? There's your J-hook pattern. You can see how the T-line is acting as support. So what's your trading strategy on something like this? They open this positive. What can we expect? Wave 1, wave 2, going into wave 3. Nucor, same scenario. You can see how this area, the T-line, continued to act as support. And the one thing I always like to point out is notice how often prices go right to the T-line and bounce back up. It's not because everybody's watching this level and they're buying at that level. It's where it kind of naturally acts as support and resistance. So what is the best things to look for? Kicker signals. Bullish flutter kicker signals. Those give that much more evidence that the bulls are in control. That was CWAN. Uh-oh. Well, I don't know why that one's not coming up. It's working. It's working. Let's take a gander over. CPEU is a bullish flutter kicker signal bouncing up off the 50. I don't know why it's not coming up over here. And ORPM is a bobble breakout with a bullish flutter kicker signal. Wave 1, wave 2, going into wave 3. This one popped up today, Fry, which is also kind of a double bullish flutter kicker signal. Where would you think the next target is likely to be? They usually take them up pretty quick to get right back into that trend channel. So this is one that you want to keep an eye on, even if you're kind of a day trader. But this is usually, when they consolidate in a trend, usually they go right back up into that trend very quickly. AKRO. What can we expect here? At least coming back up into the trend trajectory based upon this little J-hook type pattern. Oh, there's some that I missed. RPTX. Oh, this had a bigger chart. There you go. Nice fry pan bottom. It's a cradle in fry. I wouldn't consider it a cradle. I mean, it's got the same characteristics, but usually a cradle is a very flat handle. This is kind of your slow curve bobble breakout. It can be a backwards J. Which one's that on, Cynthia? Did we do this one? PRBV. There's your kicker signal. Oops. You can see the trajectory here. You can see the J-hook type. And notice how they started the J-hook. There's your kicker signal. A bullish engulfing signal or a close above the T-line, which takes precedent. Well, first of all, you want to see a signal. So if you see a bullish engulfing signal, it still has to be confirmed. If you see a bullish engulfing signal that closes above the T-line, now you've got a little bit of additional confirmation that you could be buying immediately on positive trading the next day. So here is the, again, the relevancy of the T-line. They took this up big, and they pulled back right smack dab to the T-line, and that's where the buying started. So on this day, what would I be looking for? I want to see it trade positive. Once again, they used the T-line as support, took it up. That's just that additional confirmation that this area is the natural support and resistance level. I can't see a J-hook. All right, a J-hook is something that just looks like a J-hook. It goes like this. There's your J-hook. and I draw it out. I don't know whether I got the drawing tools over here. Display. Up this window. Yeah, you would think that now that I've used this service, CQG, for just a mere 20 years, I would know whether I can draw things on here or not. And I don't know. If you can follow my cursor, I'll do it slow. You get this rounding bottom that starts the next pattern, which if it does this becomes your little J hook. I'll see if I can find something here that's better illustrates this. So what we're going to concentrate again on Saturday, this coming Saturday, is how do we effectively use the information we know about the T-line and where you close out positions. So if we're sitting up here, there's our kind of our fry pan bottom breakout. How long do we stay in this? Well, now that we're up here in the overbought area, we want to be a little bit more diligent as far as where we want to set our stops. So it gaps up. And what is the thing we look for as far as exuberance? This is, if you're in the overbought area and you're that far away from the T-line and they gap it up, either something wonderful is happening or that's exhaustion. You get ready to take profits. You set your stops where it shouldn't trade. And if it comes down through this level, where do you think your next target is? Back here to the T-line. Same scenario on this side. You're down here in the oversold area, and they sell it off all the way down to the 200. What is your alert for taking a profit? Even though when it's down here and you're short, you've got another dark candle all the way down here. Except what's your alert right here? Look how far away you are from the T-line. So what do you do at that point? You flip to your 10-minute chart. Yep, they've hit down here. Now they're coming back up. Let's get ready to take some profits. What this does, and I say what this does, what this should do for you, which it does for me, is get rid of that exuberance. Man, I'm short or I'm long, and it's going to go great guns. Well, that's when you start looking for a reversal. Okay, let's take a gander at that. Oh, I think I knew that. Somebody mentioned that earlier today. So if that was after hours that they reported, it might be down a little bit. I wouldn't pay attention to this tick. Oops, 200 shares. Yeah, so this is really nothing. So it didn't really move after hours. What did I just do? Oh. So that was our 10-minute chart telling us, oops, they slammed it down, and now they've done a bullish harami. Maybe it's time to take some profits. let's see. That's the 10-minute chart. This was not a signal. Nothing yet. But now this becomes a signal. There's your doji sandwich. What should be your next expectation? Well, because I can't draw. At least coming up to this level. Now, could it get there? Pretty much. The stochastics are still down in this range. I guess it's not that far down. They could get up through this level. Piercing signal, gap up. Is there enough strength to get through this level? Looked like it did. Well, it did. When I would be looking at this, the stochastic's got a lot of room in it. They just gapped up. If they get through this level, meaning the 50, where's the next target? Up here to the 200. Still heading up. Still coming up from a gap up through the T-line, now through the 50. If they trade this positive, where's our next target? Right up to this level. So just the fact that we can see a buy signal and where it occurred in regards to the T-line, this gives you that little bit extra analysis of what could be happening here. Well, that's pretty much an observable resistance level. And what did this gap up? Best friend at the T-line, support heading higher through this level. So there's a big change of investor sentiment. Okay, and the sell side, I can only find one good one, which was, who was that? George pointed this out. Look at our, right up until this point, still inconclusive. What was it doing? It's still trading above the T-line. But what did this day tell us? Well, now we've got a bearish doji sandwich. They didn't close it above, or they closed it below the T-line. What's this pretty much telling us about this area? It was acting as a resistance level. Now we've got the prospects of wave 3 bringing you down into this area. Anyways, we're going to be going through hundreds. I say hundreds because I think I'm already at 200 charts, and we're still got tons more to go, or I'll put more together. And the whole idea of the training is not so much to analyze exactly what's happening here, but it's so that your mind's eye sees this and already recognizes that's something to be looking at again. That's got a much stronger prospect to it because of the bearish signal through the T-line, or a bullish signal through the T-line. So anyways, Saturday is supposed to be cold and yucky. They'll come in, I think you'll get a lot more information than you expect coming from the hundreds of charts that we're going to be looking at. Okay, whoops. I did not scroll down. Oh, Darren, I just put the link in. Let's see, Magic, yes, earnings, so it didn't move it around. When looking at the daily, do you see the regular closing hours to determine the trend, or after hours for the next day? I do both. There are a lot of times that on the after hours, the chart looks good, but a lot of times it might be up. I mean, there's some times where it's one share. I don't know what the volume is after hours, but the volume is very light. What one were we just looking at? Anyways, it was a couple hundred shares. So, for example, I just can't remember. Oh, PetQ. When I looked at PetQ on this day right here, I had the after hours charts up, and it was doing a bullish engulfing signal. Let me see if I can pull that up. Well, no, I can't. Go on. But as I looked at this and I was scanning that night, it had a big tail to the downside, and it closed up here after hours after their earnings, which was a strong chart. But in normal hours, it closed down here. Apparently, the earnings were a surprise, so we knew that if it opened positive or at the level that it closed at when we were looking at it that night and opened positive, we had a kicker signal. So we could be ready to buy immediately on the positive open. Now, sometimes you get a good strong chart, and as you go to the after hours, it's just a tick. It's just a, and you look to see what the volume is, and it's 2 shares or 100 shares or something. So that doesn't count, or you kind of have to take that into consideration that that was just a bad or last minute tick. All right. Oh, Darren, no, that's 297 for non-members. It's you know, $100 off, 197. Yeah, and we serve lunch, so lunch is included. Okay. So this is the after hours. What am I looking at here? Something is not right. Oh, that's the 10-minute chart. So the Dow on the 10-minute chart closed down here and trading up a little bit, which means Dow is right in this area. Okay, I think that's about all I got for tonight. What were, somebody mentioned about Fry, which is one of the battery companies. Is there something to be announced on it, or I don't know. Oh, so that's another thing too. This is where the alerts are created by the candlestick charts. Today I bought this one. I think it closed down here, but you can see the pattern. There's the fry pan bottom. There's wave 2. There's breaking out into wave 3. Oh, Fry had earnings today? All right, thank you. So what does this kind of tell us? One, the RARE process, our research analysis reverse engineering. So they gap this up. So the first thing I do when I see a gap up and a big move I go to see what the news was. Well, the news was that they had 100% success rate in one of their or in their cervical cancer treatment. So you look at it and say, all right, is that information is that just a one pop and it's going to sell off? Or is that something that as the news gets out, it's going to continue wave 3? Well, something like that probably is going to create wave 3. So this becomes one strategy, that when you see a breakout situation, you expect a 45 degree. Now I say that's one strategy. There are so many things to look for in chart patterns. Let's see if I can. That's not what I wanted. Oops. That when you see a pattern breakout, we can kind of anticipate what type of move could occur after that initial breakout move. Let's see, like right here. That told us that we had a 45 degree until we saw a sell signal. So this is why I always kind of tell people you don't have to learn all the signals and patterns. Well, learn the signals and the patterns, but you don't have to know them dramatically. What you do want to do is find 3 or 4 or 5 that you learn to find out when you see something what the likelihood of that pattern is likely to do. Even with 3 or 4 of that, becoming an expert at 3 or 4 signals or patterns, you're going to still have more trades than you can ever handle. The only difference is you're going to be in control of what to expect out of that trade versus listening to all the rhetoric that's always out there on the market. On a doji sandwich, do you wait for the following bar close and then enter, or do you enter above or below the doji depending on a positive or negative trade? If I see the trade setup, if I saw this setup, kind of a failure, bearish engulfing, dark cloud, doji, I might ask myself or say, all right, if this trades back below the T-line, I know I've got a bearish doji sandwich. I can be going short. Or if I found it tonight, knowing that this is a bearish doji sandwich, if it opens lower tomorrow, I can be shorting it because that's telling me I'm probably in my next wave down. So it all depends on where you see it happening. And let me see if I can remember one that's trying to find one where if you see it occur right on if, for example, I'm trying to find an example where you saw the first big candle and then the doji closes right on the T-line or a 50. Well, now if you see that, say, well, if this opens positive tomorrow, it means that resistance level is not going to act as resistance anymore. I want to be buying immediately. Whoops. There's a good example right there. But if I saw this, I happen to be watching it, and it opened positive, I'd start buying it. Trying to, I've got examples. Ah, uh, 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 uh. Oh, fine out loud. Here's an example right here. That if I saw this doji after a bearish candle, that if I saw it open the next day lower, I'm shorting immediately. Or to add to that, if it opens lower and the market's opening lower, I can see what that setup is. I've got a bearish doji sandwich. Did it ever show a 2+2 today? Did it show a 2+2? Dark closing, below the T line. As far as a failure, here was a very strong signal. There's your bullish flutter kicker signal. So this is where you still have to use your analysis. What did we expect? Well, it looked like they opened it positive and traded it positive and came right up to the 50. Now, anytime there's stretching to get to a moving average, it looks like that was it. And it started selling off. What if you know, as soon as it hit the 50, if it started selling off, the first thing you have to kind of react to is, oh, it hit the 50 and they're taking profits. Maybe I better take profits. When can I buy back? Well, if it turned around and came back up through the 50, whoops, it came up, started selling off, then turned around and started heading back up, you could always buy it back. On Fry, if you bought it yesterday at the open, would you have closed it when it traded below the open? No. No, just because it trades back below where it opened, all you can say is, I didn't buy it right. Where would I have closed this? It probably closed back below the 50. That was not a good sign. But the fact that they took it back up, gave me a doji, now what's my trading strategy? The doji rule. This had opened lower and started trading lower. What did that tell us about the strength of this up move? It wasn't there. Close it out. It needed to open positive. Now, it's been a little bit scary today with it coming down, but notice again, this is why I always point that out. Notice where it came to. Right smack dab to the 50 and the T line, and then traded back up. If I was long today and it came back down here, what would have been my trading strategy? Oh, it looked like it. Opened up, came down, and then started right back up again. And here's another thing we're going to be going through on Saturday, is if we are in a position and it looks like daily it's working well, is it going to stay up here? Well, that's where, so far so good, so far so good. And not really selling off. So what's that do to our daily chart? Tells us we're staying up here near the top end of the range. What we want to do is use the T line, whoops, to tell us what should we be doing right here. Is it still heading higher? Or I got a shooting star. If it starts trading weaker the next day, what's my assumption? coming back at least to the T-line. I should probably be taking some profits. Okay. Any other questions on candlesticks? I'm hoping what to convey to everybody, because it's what I needed myself years ago, was that just the fact you're seeing signals, patterns, and the distance from the T-line, where your stochastics are, that all becomes something that you can visually look at in one instance and say, all right, the probabilities might be going against us here. Well, you still have a fry pan bottom. How do you get ready to trade tomorrow morning? Popped up 5%. Do you, so is the question of, let's see, if you can see this chart, I can't see whether, this chart, I did that. Wow, way off track here. Let's see, after hours, it's kind of trading relatively flat. Oh. Oh, I'm sorry. After hours, you can see it did this, and now it's doing this. I don't know whether you can see the fry pan bottom over here, but it's holding up above the T-line. So the chart actually looks like this, which over on this chart means it's a big chart. Now, would that be the, I shouldn't say that. That would still be a place to buy, because if it's trading up here, it's just broken out. So you still have the prospect of it heading to the 200. Now, we had Guy Cohen on a Saturday morning session. There was a few people that took a service. Anybody in here tonight using Guy Cohen? The reason I ask is because he's got a service to show when the option trading is starting to pick up dramatically, which he kind of saw right in here, which is a good indicator that something big is happening. So I'm going to track down who does that. And also, in this season, holiday season, we are getting into the holiday season, we want to see what stocks work best in this area. There's seasonality. So with that information, let's say it was Mattel, obviously. Let's say their seasonality is strong, but during this time of year, but it's trading this way, then we know that's seasonality is not working this year. Okay, I guess with that, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. Golf. No, that's not really a cradle. A cradle is usually at the bottom. That's just kind of a reversal. Cradle is more like this, where it's at the bottom of a trend, then has a flat trading. Unity, that's a kicker signal. So now you got that doji sitting right here at this level. This one would have been a good one to say if it opens positive, you got a doji sandwich breakout after your kicker signal, that means there's going to be more upside. So if this opens positive tomorrow, you could be buying it immediately. Frog, that one you could go short. You can see your evening star failure at the 50. You can see your evening star failure at the T-line. So that becomes a good short position on weakness tomorrow. A coin, that's kind of a nothing chart right now. I would have covered any short positions. I wouldn't be going long. I probably wouldn't be short. That one, you stay short, or you could even be going short. Wave 1, wave 2, going into wave 3. That's DCGO. That one you can get ready to buy. Again, notice when you were this far away from the T-line, where would you set your stop? You wouldn't want to see it trade back up above the open of that last candle. How do we do that? Okay. PLTK. Nothing yet. If you have gone long, you can stay long. If you're going long, I'd probably use yesterday's, what is today? Friday's close, that if it trades positive and goes positive, there's your Morningstar signal. That is confirming the breakout. Biddy, well, why does that not come up over here? I don't know why it doesn't. Sorry. On QRTEA. Nothing wildly exciting on that chart. If you're buying, it still has to get through that downtrending 50-day moving average. If I was thinking about buying this, I'd probably wait to see if they could get it up through that that moving average. Right now, it's not a real exciting chart. It's kind of your bullish flutter kicker signal on Nikola. You could buy this one. Same scenario. You want to watch to see what happens at the 50. Alcoa, that's kind of your bullish flutter kicker type breakout, or at least your trend kicker. Rounding bottom, you stay long on this. You're in not quite in the overbought area. I'd stay long, but I'd keep a safety stop at today's open. Netflix was acting well. It was up, I think, 12, 14 points at one time today. But there's your kicker signal up through the T-line. There's your prospect of a J-hook pattern. Disney, nothing. I wouldn't be short, and there's no reason to go long yet. I wouldn't be in this one right now. one way or the other. Kaba. There's your J-hook pattern. And where was your, where was your prospective resistance level? Right here, and it blew through that. So I would check to see if there was any news on that created that that move today. Flux, that's a perfect J-hook pattern setup. And this is where you can add everything together. You can see how right here at the T-line, it started building up strength. You can see right here, you had your doji sandwich breakout. Now, what do you want to watch for? The fact that you've moved that far away from the T-line and you're getting up toward the overbought area. If it trades positive tomorrow, I'd immediately put a safety stop here. If it trades up pretty strong tomorrow, like up here, then you put your safety stop right there. Schlumberger, nothing wild and exciting other than you're in a steady eddy. Halliburton, same thing. As long as they stay above the T-line, you stay with it. Devon, Devon, if you've gone long, don't let it close back below the T-line. If it does, what's it telling you about this trend? It's not there. It's still lollygagging. And AMLX, Henry, I'm going to ask you, what direction is that one going? I wouldn't be long or short this one. Rivian had a bullish flutter kicker signal. It didn't confirm. If I was going to buy this one, it'd be just above today's high, telling us that flutter kicker signal is not resistant here at the 50, and you want to see it kind of break out through this level. PNC, got to be careful now because you can see what's happening kind of right in here. So I'd be, if I was long and this opened lower tomorrow, I would close it out because it's probably now in a sideways. It needs to open positive and trade positive if you're long to stay long. PayPal. You're also running into a bearish harami right about in this area. Whoops. Once again, you've got your bearish doji harami. It's going to move in the direction of how they open tomorrow. See what the futures are doing right now. They're trying to come up a little bit, but that, remember, futures tonight mean absolutely nothing. It's what the investor sentiment is doing at 7 minutes to market open tomorrow. PANW. That looked like it's failed. If this opens lower tomorrow and you're long, you close it out. That was your warning. You had a doji, bearish engulfing. I would have closed this one out today if I was long. That pretty much told you you're not going through here right now. STRL, this one you can get ready to go short, Jace. Your hanging man, bearish confirmation, now confirmation with the close below the T line. So if you were long, what's our trading strategy? Stay long until you see a sell signal and a close back below the T-line. Lithium got weak today. There was your big shooting star. This one probably is telling you at least it's coming back to see what it's going to do here at the T-line. The other ones, this one wasn't as bad. ALB. PLL, indecisive today. And LAC, well, that came back down, bounced off the T-line. But again, the evening star signal, right about the same level it topped out before. If you're long on this one, it needs to open and trade positive to stay in it. Verizon. If this opens lower tomorrow, observe the obvious. They failed at the 50. Oh, yeah, this, yeah, this would not be one I would be going after unless it did a big gap up. That's telling me this one's running out of steam. Okay. I watch this one tomorrow, Fry. Oh, I should have marked some of these. I would still watch this one. Oh, I keep goofing up with that often. TDSB. I watch this one on a positive open tomorrow. Did I cure? That one's got good prospects, the Doji Sandwich J-hook pattern. Okay. And the short, just if you want to have a short in the position, this one is very viable on a lower open tomorrow. Okay, I guess with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. Oh, that's right. HRT is a good cradle pattern setup. Thought there was, I'll have to go back through. I should have put PR, EB. That's viable. That's just breaking out. That's all right. Fry pan bottom on blue. All right, everybody. Have a good evening. We will see you in the morning.